All right, welcome to 2023. This is the first episode of Stock Shots for the year, and this is my shot at a stock. And this year, I'm going to change it up. So last year, I was doing the SPX. That is generally for investments. I do want to change it up to something that I actually do more of, which is day trading and swing trading. So for that, we're going to change over to the SPY, and that is an ETF that pretty much traces the SPX. So essentially, it's the same exact thing, but it's a little bit easier to get into if you're doing options contracts or if you're day trading or if you want to do a quick swing trade throughout the week. And as you can see here, I've already done the levels and I've made a channel and done some support and resistance. And we're going to go a little bit deeper because we're talking about day trading and some other kinds of swing trading. We want you to know where you may be able to expect to take some profits or enter. Now, with all that being said, we are not telling you to buy, sell, trade, or put your entire life savings into something you know nothing about. So please do your own due diligence, regardless of who says it, where it comes from, or even if the internet told you to do it, make sure you do your own due diligence throughout the process of investment. All right? Education is king. Make sure you do everything you need to do. So let's get to the point. GTTP. Get to the point. It is time to think about what we're going to be doing this year. As you can see, nothing has changed. We are still in the grizzly zone. We got our grizzly line right up here, and we got pretty close to there. We got smacked right back down. So let's go ahead and first and foremost make. All right. Now, we made this a little bit bigger. This is going to make it easier for you guys to see what I am talking about. Remember, I'm not telling you anything that I don't see in the past because I look in the past to see what the future may be doing. Okay? Because all the information literally is over here. So why am I going to make something up when I don't have to? So let's get my favorite tool out. It's my pointer. As you can see, in the last couple of weeks in that area, we have been consolidating. And it looks like we are doing one of my favorite things in this market, a bear flag. So what's happening here is consolidation was going up towards a level of what? Resistance. But if we go to the daily, which we're going to be doing shortly, we're going to see some more information that's going to help us make some profitable trades in the next couple of days, maybe in a couple of weeks. So let's see what we got. First and foremost, we are still in a downtrend. Regardless if we're going up, we're not going back up to our high at this moment. All we can say is that we are still in a downtrend, which is having a slight pullback. Now, this is important because we talked about doing these earlier. So a pullback is important. And why? It's a good place for you to make entries for your next trade. So what we just did here was pull out Fibonacci retracement tool. We already know we came all the way up here, right to that grizzly line, got smacked down. So we got smacked down to what? The 618. Now that's a great place for a retracement. It doesn't mean we're going to take all the way back off, all the way back up to here. Or does it? Because there's some information on our daily chart we need to know. So first and foremost, remember, this line right here goes to the 618 for our retracement. That's important to know. That's a homework for you. If you want to know why that 618 is important, you'll figure out soon enough. If you also notice, we had this right here. Now it's pointing to something that is important in our daily. As you can see, the word gap just popped up on our screen. We also had a slight gap right here, which was filled on Friday, and that was of last week. So that was on the 5th. Was it the 5th already? It was the 6th. It was the 6th. That gap was filled. Now, if we continue to go up, even if we go up higher, the only place I really am looking to see us go is right here to this area. So on the SPY, that is approximately 395 to the 398 level. I would actually love to see it fill that 398 level to there. And we're going to see why as we come up to this in the daily chart. So I'm going to leave this here so we can explain this first. And remember, I want to keep this short, 10 minutes, keep you in profit and keep you doing what you got to do for the rest of your day. So let's go to the daily chart and let's see. All right, so let's take a look at why we're going to get paid. Why? So supposedly, we're still in this downtrend, right? It seems like we are. Nothing has really changed. If you look, here is January 6th of 2022, right here in this area. And there we go. That is January of 2022. Right now, we have hit January of what? 2023. I know it's amazing, right? So, first and foremost, let's zoom in to January 2023. There we go. So, it's not a lot of movement. For this particular time, let's see. Let's first and foremost look back to the past. So, the beginning of last year, we were what? We were already, wait a minute, we were in a consolidation pattern. So we were consolidating, or what you could also say is accumulating. So let's get rid of this. We don't need this anymore. It's time for us to do some homework. To there. Or actually, let's make this a little bit easier. We know we're going to make a box, so there we go. So at this time, we were in a consolidation pattern. Same thing. Hey, well, if the past is anything, let's see if it teaches us anything. Consolidation pattern to a drop, retracement, and then drop again. To what? A bear flag going up just to come down. So one thing you'll notice is that we made an M pattern here. So we went up to here, came right back down, went up again to retest that same level of resistance and continued to drop. So that's a great thing. Why? Because we're going to start looking for that now. So we started the year off right here. We're in a consolidation pattern right now. That consolidation pattern looks almost exactly the same as a bear flag that we had last year around this time. We've already had our M pattern. Here's our 1, 2 for our second test of this area of resistance. So if you're like, well, why is that an area of resistance? Well, let's take a look. Where? To the left. And we're just going to draw a line. Why? Because lines are easy to do and they make sense. So why draw a line here? Well, first and foremost, look at this candle. That's where it stopped. Look at this candle. That's where it stopped. Look where this candle is. That's where it broke. Look where this candle pretty much broke. Right around there. Got resistance here. I got a whole bunch of rejection here and here. Well, it seems like this area is somewhat important. Let's keep going back. Guess what? There's more information right here. Look at this candle here and here. So we are pretty much where we want to be when we talk about areas of support and resistance. Right here. 1 and 2. So at this point, we are now waiting. Are we going to see a test of the 395 or 394s all the way up to the 399s or 398s? This is something I'm waiting for. Why? Because, of course, I am looking to do puts. If you notice, every time, this is a daily chart, everybody. We're in a daily chart now. When we get up here to this line, even if I just go 1, 2, 3, that's 3 times price rejected from this resistance of a trend line. 4 major times, minimum. We have a minimum of 4 major times it broke from this grizzly line is what I'm calling it. Why? Because we get up there, the pause and claws come out, and it's time for us to get these puts in so we can get paid. Why? Why do we want to get paid? Because it makes us happy. So let's stop playing. Let's think about how much we're going to get paid. Let's think about the last time it hit here and how far it actually went. It went down approximately $82. Why is that important? That's 19%. So if we're looking for at least a minimum, let's not even say 19%. Let's say we'll look for a minimum of maybe 10%. 10% of this line. So even if we come back up and retrace, let's say 10% would take us right about here in this area. So why are we going to mark that? Because this could be an area where you might want to take some profits if you are doing a put. And if you notice, round numbers are very happy in the market. So even numbers do very well in the market. And this is going to take a little bit longer than 10 minutes because, hey, welcome back. We're doing a lot of stuff here. We're changing up the format a slight. And I want to make sure you get good information. So this is a area of structure. If this breaks this structure, you could always re-enter your trades to go further down, or you could take profit and just watch the show. So what I'm looking for is a minimum of 10% down to where $363 in the SPY. But if I took it all the way down to that 19%, it would essentially take me down to the $324 area. Now, I could do a couple of long plays going down. I could do a couple of day trades going down, but I'd rather just set it and forget it like a crock pot. And that's how I like to trade. I don't want to do a whole bunch of monitoring. If I know the market's going down, I just want to put my trade in and watch it do its thing. So that's what we have for this week in Stock Shots. I hope this gives you some information. It may even let you know where you can enter and exit some trades. Remember, if you're not charting, you're not being smart. Get out here and make your money because it's waiting for you. Now, the main thing you have to remember, if you are trading or investing, you are being paid to wait. Congratulations. This is the job you've always wanted, but you have to wait. Why? Because we are still probably moving up to here. And once you get there, that's where you enter your trades. Around this area, after the gap is filled, that way you know, hey, this may be out of steam at some point, but I know it's out of steam when it gets up here. And you can even try, if you want to, ride it up. But that's on you. I'm not telling you to buy, sell, trade, or invest in anything you don't know nothing about. Please do your own due diligence. And thanks for listening to Stock Shots. Remember, this is my shot at a stock. If you want us to do some analyzation of your favorite stock or chart, let us know. We will gladly do it. It is a good time. We enjoy it every week. And if you have any questions or comments, let us know. All right. Thanks a lot. Enjoy your brand new year and happy holidays if you're back from them. All right. Goodbye.